Hi, welcome back to episode 3, or live stream number 3 from the Margin of Shavety crew. We've got sort of the New Zealand / Australian team back this week. Andrew will keep classifying you as Australian unless you have a desire to be classed otherwise. Look, I'll just do a quick intro to Movember, so you guys are sort of familiar with the cause and why we're doing this in the first place, if you're not familiar with it already. And then essentially this is just going to be kind of a Q&A session about all things investing or otherwise. So if you've got any questions, definitely pop them in the chat and we will get to that. But yeah, let's have a look at Movember. I'm just going to share my screen here so we can have a bit of a look at how the Margin of Shavety team are tracking. So I mentioned this on last... Yeah, impressive, I know. I mentioned this on last week's stream with some of the other guys in the team, but we had to bump the price target ARK Invest style on our Movember campaign. So we smashed through the $2,000 target and we've bumped it to 4, and we're making good progress towards that. So appreciate
Tesla
everyone who's donated. Yeah, Tesla to 4,000. Yeah. So if you're not familiar already, Movember is the Movember Foundation essentially raises money every year for men's mental health and suicide prevention, as well as the 2 male-only cancers. So I ended up doing Movember solo kind of here on YouTube last year, and I thought it'd be a good idea to get a team together for this year. And it's been really fun so far. So if you want to contribute in any way, no pressure, but there will be the pinned comment in the chat will take you to the Margin of Shavety team page if you want to donate, or if you got any burning questions and you can't get through all the other comments in the chat or something, super chats are always open, and we'll be donating any kind of super chat revenue that comes through as well. So, all right, let's start it off, guys. We had a suggestion from Taylor actually just before we went live around obviously men's mental health. We're pretty bad at actually talking about things that concern us from time to time. So Taylor had the idea of maybe revealing some of our biggest fears and talking through that a little bit. Do you want to kick us off, Taylor?
Yeah, so my one's a interesting contrast because my biggest fear is kind of not doing things, or say if I passed away at any point, having things that I wanted to do. And that's an interesting contrast with investing because you're foregoing current consumption to do it later. So it's very interesting if you want to do things now, but you want to do things later as well, and you got to put some money away and have goals. So I've been trying to kind of balance everything I want to do in the current moment and invest at the same time and keep a nice healthy balance so I'm happy and financially just well off. So I've done skydiving and bungee jumping and all that, which is very expensive activities, but trying to financially invest at the same time. And yeah, just knowing how many things can kill you, especially in Australia, not really in New Zealand, but apart from people driving on the road, just trying to keep happy every day is, I guess, just big fear of not doing that.
I like it. Now, I guess also, I mean, pretty rough times that we have been through. No? So when you think about all the COVID lockdowns, and I mean, everyone in Melbourne has lived through a couple of two rough years with the hardest lockdown in the world and the longest lockdown in the world. I mean, I don't want to compare this to any other things, but it was certainly tricky. And while we're in a really good situation in our house, and everyone was still happy and healthy, but I think this has obviously impacted a lot of families, and I think sometimes even it doesn't get talked too much about that. Obviously, those lockdowns had an impact on mental health as well in a lot of situations, and probably even sadly enough created a lot of situations for people where they felt like they don't have a way out. But this is unfortunately something that does not get really a lot of attention in media. No? And again, while I was in a really good situation all the way through, we had support from friends. Family unfortunately is in Germany, so they are far away, but still lucky in that sense that we have people around, no? And so I think it's a great cause, and that's why I'm so lucky to be a part of that group that we try to raise that awareness for mental health in general, and especially for all the men that are sometimes shy in talking about it. So I think it's a great thing, and I used every chance when someone's talked to me about the mustache to just shift the point and ask how they are doing, and I had some really good conversations already. When you look silly, it's always a good conversation starter.
No, you look gorgeous, Michael. We all do.
Doing a lot better than I am with the mo, that's for sure. Very impressive.
Oh, and not freshly shaved though.
Yeah.
You look almost the same as 2 weeks ago, Brandon.
Yeah. Oh. Hey.
Oh, now there's something.
Oh, there we go. Oh, yeah.
Yeah, we got a good comment from Frank. I'm still in shock from Brandon's luscious long locks from the first episode. He can't grow a great mo, but he makes up for it on top. I like it.
Yeah. Yeah, locks are growing. Yeah, I just need to take a little bit here and put it here. That's all right.
Yeah, Frank has basically just the other way around. Huh? So he has no hairs on top, but a really long beard. No,
he does. Yeah. Yeah, it's quite impressive. I couldn't convince him to join the Margin of Shavety team. I think he said his fiance's never seen him without a beard, so he's pretty attached.
We don't want to kill relationships, huh?
Yeah, exactly.
But we are stretching mine. That's for sure.
There you go.
And you were saying the same, Tom, no? That it was stretching. The mustache was stretching your relationship.
I mean, it being for a good cause helps a lot. If I told her I was hoping to keep it for the next 12 months just for fun, it might be a different story. And then I feel like if I were to go for like a big handlebar mole or something, that might be pushing the limits as well. You got to keep it relatively clean. Yeah.
Man, that would look disgusting, but also beautiful.
Yeah, for sure. Did anyone else want to share any fears or anything they want to kind of have a chat about before we jump into any questions? I can share one, and I actually know it's like a kind of common reason why a lot of people start YouTube channels, but I used to be absolutely terrified of public speaking. And from time to time, I still am a little bit, but the YouTube channel has actually helped tremendously with that. Like I remember having to do speeches in like even in intermediate and high school, and then at university, and I'm just like shaking with like my little cue cards in front of me and stuff. So that's maybe one of mine, but hopefully working towards kind of ironing that out over the last few years with this sort of stuff.
I spoke with Neil about it, how well your podcast is, or how well you do your podcast. It's just amazing how freely and amazingly open you speak on your podcast. So well done on that front, for sure.
Appreciate it. It's good having guests. A lot of them really like talking, so I just have to ask a question, kind of sit back for 20 minutes, and then get to the next question. that makes my life easy.
Right. I think I just share one fear, if you guys don't mind. I think one of my biggest fear, in terms of mental health and fear, like some of you guys know my story that I lost $100,000 day trading. That's over 10 years ago, and I got a video on it. And that the biggest fear for me was just being able to pay back the loan. I had a debt of about $75,000 when I was making $40,000. And so my biggest fear is still like, at the time, I paid off all my debts and all this stuff, but it's just like having a risk. It sometimes terrifies me. Like I always look at the worst case scenario, like trading with leverage and all this stuff. But even after I got over it, even after I tick off all the checklists, like what's the worst case scenario here? Like what could go wrong? Sometimes the fear that I have today is losing on all the wealth, all the things that I've done. Sometimes like the more you have, the more like the fear doesn't decrease. Sometimes you have the fear of you're gonna lose it all. After 10 years of building all this things, right? So that's just my biggest fear. But I just have to learn to balance it. It's just from me.
Yeah, I feel as though that's similar. I'm similar. Like fear would be to lose what I've built or what I've accumulated, because I think it's natural as well. Because you kind of just think about how the work that you've put in to do what you've done to get to where you are, whatever your situation might be or whatever you do. There's definitely a fear of losing that. Yeah, for sure. I don't know if you guys get that as well.
Yeah, I think that's
mine's
why.
growing. My fear of that, yeah, it's definitely growing as my portfolio grows.
Yeah. Yeah, relevant
think-
to investing. Hey, if you're sitting on like, I don't know, for example, if you're sitting on Tesla stock and you've made a huge gain, then you're just sweating like, oh man, what if it goes down by this much? Yeah, you can understand why people do, make these sort of rash decisions and whatnot with their portfolios because of a fear of, either a greed or a fear, I guess, in either direction can make people do some pretty crazy things.
Yeah.
Yeah, that's one of the reasons that I think value investing resonates with me, at least, but probably a lot of people. It's sort of like protect the downside first, and then you can focus on the upside and the rosier future kind of after that. That allows me to be quite comfortable putting larger sums of money to work over time, I guess.
Yeah.
And I think for most of us were, especially Taylor, starting super young from an investing perspective, like trying to get the mistakes out of the way early, and then when you're in your like 40s, 50s, 60s, managing sums of money that you really can't afford to lose, like you've hopefully figured things out a little bit by then.
Yeah, I think since I've started early, I probably won't be doing any massive deposits in one go. It'll just be week by week, paycheck by paycheck, which is nice and comfortable. I couldn't imagine like starting at 40 and having, I don't know, 50,000 in the bank and then just thinking of putting that somewhere. That would be a lot more stressful than what I'm doing, which is just $50 to $100 a week. That's more relaxing for me.
Yeah, 100%. Right, should we get into some questions?
Let's do it.
Dude.
We've got a few good comments here. Boo, Brandon with the slick back here. Frank wants you to let it down. Or was that a one-time only deal?
I'll do a samurai.
Chat,
the problem is that if I let it down now because it's been tied like this, like it holds the waves from the hair tie, so it looks pretty bad. I'll do a samurai. It'll look pretty bad, but continue. I won't be able to hear you guys, so continue without me.
We'll leave Brandon to figure that out. We also got Neil couldn't make the stream this week, but those are some majestic mows, boys. Absolutely. Neil's is looking pretty good too, by the way. Oh, look at that.
Oh, look at that. Look at Brandon.
You gotta love it. we've also got a bigger sphere from After Dinner Investor. Actually, the tears. I didn't read that comment. Probably the tears from Baba watering the stashes. Yeah, I feel that. Anyway, right, let's get into some questions. So, actually, speaking of super chat from Frank, we've got one. Tencent or Alibaba? We're into the China questions already. Tencent or Alibaba, and why? Any volunteers to take that one?
I don't know enough about Tencent, to be honest. Are some of you guys well versed in Tencent? You guys been going deep on Tencent, or?
No, I just play a lot of video games and know that it's growing and probably undervalued. That's all I got.
Yeah, fair.
I can add a little bit here, I guess. I would Tencent or Alibaba. I would say Alibaba is cheaper. Tencent is maybe better.
It's in a better business.
Yeah, I think it's a better business.
How so? What's kind of the way of thinking that?
I think the moat around WeChat is so undervalued throughout the world that that is like I don't have a lot of experience with China, but I have been to China and I used to work with the Chinese a lot, and WeChat is, I don't know how familiar you guys are with it, but it is a beast. It is life over there. Like their lives run around WeChat. It is the most people spend more time on WeChat when they would. I would assume that anyone else spends on Instagram, Facebook, everything else, the internet in a whole, probably in our countries. So it is highly addictive. Everyone is using it for everything, and it is. It's an epic platform that they have, and the things that they can do and the things that they've already been able to do. Like they just made Pinduoduo. I don't know how to say the name of the company, but they turned that into what it is essentially just through WeChat. And they did the same with VIP Shop. They did the same with all these other now multi-billion-dollar companies that they've just been able to just push out on WeChat essentially. Pretty epic.
Yeah. Who we
We lost someone.
We lost Michael.
5 remain.
Hang on, he's back. We've got Michael back.
I was actually gone for a number of minutes, and I think the image was probably just frozen. My internet was lost. Sorry for that.
Looked like you were concentrating really hard, maybe.
It was like,
It wasn't really. Was it bad or?
Well, to be
other
perfectly
model.
honest, I didn't even notice.
Didn't
so
notice.
it can't have been that bad.
yeah.
Yeah. Yeah.
It wasn't anything like that, so you're good.
Yeah, you're good. I just looked up. WeChat apparently has 1.2 billion monthly active users, and I heard a stat the other day that the average WeChat user spends, I think it was 86 minutes a day using WeChat. So it's a huge amount of time people are staring at that app.
Yeah, like imagine that. So that's 82 minutes, right? But that would be skewed towards imagine if 1.2 billion people have it. That's essentially their entire population. So there's a lot of little kids, and then there's a lot of older people that also have WeChat that wouldn't be using it that as often as anyone from ages, the money making ages between say 20 and 50. For the average to be 82, I'm pretty confident. I heard that. I just remember when I was there. I swear they're spending 5-6 hours a day on using.
There's probably a bell
like,
curve.
It runs their it runs their entire lives in every facet of their lives.
Yeah. And maybe just an extension of kind of the Tencent discussion. So the natural progression for the value investor community is to ask a question like after dinner investor just has here, or this more of a statement. I'm starting to think my portfolio should be 33% Process, a third Naspers. I actually just said a third Racer, so I thought that was going to say a third straight up Tencent. But you've done a big bit of digging on this as well, right, Andrew? So we heard that Guy Spear recently has bought Process. Matthew Peterson, I think, owns Naspers. I'm guessing Monish Prabrai owns at least one of those two. Do you want to talk us through the situation there, or if anyone else is familiar with that, feel free as well.
Yeah, I guess I can start giving it a crack. All right, so Process Naspers, this is a strange setup. I'll try to explain it as easy as possible because it's a bit of a mess, but Process...
Give us explain it to a 5-year-old version.
Yeah, sure. Naspers is essentially acted as a bit of a VC firm 20 years ago and bought a stake in Tencent back in its early days, and they kept that stake. So Naspers then about 3 or so years ago spun off a company called Process out of South Africa, and they put a Process on the Amsterdam Stock Exchange. This Process company now owns the Tencent stake, and then Naspers owns Process essentially. That'll do. There's a lot more to it than that, but that's the basic.
And people are interested in it because it's sort of it's like a potentially, assuming value gaps and stuff close, maybe that's potentially a cheaper way to get exposure to Tencent, right? Because Process is something like 80% of their net asset values. Tencent, Is that about right?
Yep, that's about right. So essentially, if you just did net asset value of what Process owns, they own this obviously big. You can just literally the Tencent stock price multiplied by how many shares they have equals $200 something billion or whatever it is. But you can buy that $200 billion for $140 billion through the
Wow.
yeah.
Wow.
So you're getting a chunk off. So the way to look at it would be you value Tencent first, and you work out whether it is overvalued, undervalued, or fair value based on your own metrics and whatever you want to achieve and how you look at that company. So you study that one first, and then once you feel like you've got your head around Tencent, then you move over into the Prosus Naspers lens and say, okay, well, how if I really want Tencent and I would buy it at X price. So, for example, I would say I think Tencent's fair value is about $75 a share. Well, what are you buying the shares for through with Prosus and Naspers? And you're buying them at a significant discount to that $75 once you do sort of the calcs. That's essentially how you look at it, I guess.
What else is in does Prosus have any operations, or is it just an investment spin-off?
Yeah, they have. Okay, so I've done a lot of valuation ideas on it, and I've valued their portfolio at 0, and I've valued it at probably what they think it's valued at, and I've valued it somewhere in between. They have a lot of smaller companies, smaller relative to Tencent. There's still some of them are multi-billion-dollar companies. They have a 30% stake in Mail.ru, which is Gmail of Russia.
Oh, okay, yeah.
They have a lot of other random stuff, like they own a piece of Udemy. I don't know if you guys are familiar with Udemy. Yep. They used to have a chunk of Flipkart, which is the e-commerce guys of India, but they sold that stake and made 7 or 8x on their money on that stake just recently. Within the last year or two. They're a VC firm, essentially. They focus a lot on the developing countries, so India, Eastern Europe. There's a lot of stuff. They've got, I don't know, maybe 30 to 50 relatively big. What I mean by relatively big would be 500 million plus in size valuations. But that's the thing. A lot of these valuations are a bit all over the place because some of them are still, a lot of them are private companies still. So you're trying to work it out based on you're doing comps based on like actual public companies, saying, well, this public company and this public company, this private company, they're about the same size, but you could probably value it similar, but it's not much to fall over, and then those valuations go south pretty quickly. I gave it about $20 billion. I think the company themselves said it's somewhere between 20 and 40, but it's a bit of a ballpark figure. Right.
Interesting.
So you're getting a lot of creep, essentially.
Yeah.
They hit a winner there, like they did with Flipkart or something else, where you get these little bonuses here and there.
So did Naspers, does that actually do anything these days? I remember people say once it was a newspaper publishing company or something like that. Does it actually still do anything? Or
they pay their management a lot, I think, which has concerned a few people. That's something they do.
Oh, okay.
So when
or is it all just investments?
It is mostly investments. The guys who run Naspers travel the world, literally they're running a VC firm.
Right. Okay. So there's not really any operations. Yeah.
They're paying their talent a fair bit. I valued their remuneration package at 10 to 12% of their net asset value, just on the remuneration package for all their employees and it's really high. But that's where everyone has a sticking point with this company. But if you get past that, I dug in a little bit deeper into that, and I kind of get what they're trying to do. They're trying to hire all these amazing VC people throughout the world and they're pretty much saying, well, we've got to pay up to get these people, and because we've got to poach them essentially from from these Silicon Valley companies to get them across. And they wanted to. It is a fair bit based on performance too. So and since the stock price keeps going up over the last it hasn't for the last year, but it has generally over the past 5 or 10 years been going up. The bonuses were getting pretty silly, really, because the bonuses were tied to performance, and that it nearly got out of control there for a while there. And in 2017, it was a pretty interesting story. The shareholders of Naspers 75% voted against, like, you know how they do like an AGM and they try to just like push through all these agenda items?
Yeah.
Shareholders just said no to like everything that the NASPers wanted to push through, like
Had enough.
all the remuneration policy stuff, all like bonuses, all everything. They just said no, like to everything, and it meant that NASPers had to go back to the drawing board essentially and not pay their bonuses and work out a better, fairer remuneration policy. Anyway, it's still pretty extreme.
Still interesting. Yeah.
Right. So people don't like it.
Yeah.
The South Africans especially don't like it.
Right. Okay.
Right. We've. I'm going to have to stop the NASPers chat there. Sorry, guys, because we've got a super chat that's been sitting around for a while that we need to get to. we got a super chat from Leonard. Appreciate it, Leonard. Another China question. So, for those that hold Alibaba, what would cause you to sell? Who owns Alibaba and feels like answering that one?
I own it.
What would cause?
What would cause me to sell, though? I think if I saw every other super investor sell all at once, that would freak me out.
You got one of them this quarter.
Yeah. So obviously, it's in my portfolio as well. And when you look at the annual report and you read through it, yes, the profit is obviously not as high anymore, but everything else looks like that the growth is still pretty much intact. And I remember when you, Tom, did your valuation on Alibaba, you were purely focused on the retail section. And while this is obviously the biggest part and the most profitable part of that business at this moment, I really strongly believe that the cloud part of the business will be the one that has a bright future ahead. And if there would be things in the annual report that would indicate that there would be problems with getting that part of the business forward, or if there would be regulations from the country, from China, to actually stop cloud operators altogether, I think this would be a really big red flag for me, because I work in IT, so I have a little bit of background on how this is utilized, in companies, and it is a big thing, and especially in America or in Australia, cloud providers are utilized a lot, and they're obviously, you can see with Amazon and Google that they're obviously the companies that are offering those services, and Microsoft, they're obviously doing very well. In China, it's not, the market is still relatively small for the population that you have in China, and this obviously indicates that there is a lot of workload still on-prem. That means companies still own and have their own hardware, IT hardware, and I feel like this has to be shifted to the cloud at some point. But yes, it's obviously slightly dependent on the regulations that you have in China.
After an investor likes the cloud as well.
I like that comment. That was good.
What about you, Tom? What do you think? You've got a stake in Alibaba, I think, and if you do, would you agree with Michael on that, or would you have your own way your own theory on bailing out?
Yeah, there's a few things to cover here. Alibaba's a bit of a beast kind of topic, but I guess there's a few. There's sort of two almost like non-business reasons that would lead me to sell Alibaba. So one would be this whole essentially donations to the CCP or to Common Prosperity that they've just planned to spend quite a bit of money over the next couple of years on that. So if that really got out of hand to the point where there's no cash being retained or anything that's left over for shareholders, that's a big red flag that would lead me to definitely reevaluate. Another part of it, which I think is probably a smaller risk, is sort of the VIE structure, which everyone's sort of focused on. If anything were to be compromised there, assuming that the stock just didn't completely tank on that news, which it probably would, then you'd have to reevaluate. And then in terms of the core business, like Michael said, I largely focused on the e-commerce part of Alibaba. That was the bit that I felt was most predictable in the business. Like it's generating most of their revenue and even a higher percentage of their cash flows, because cloud's only just getting to profitability. So if they can reach their sort of, I think, early 2030s kind of target for the number of annual active customers they have inside of China and outside of China, and they can continue to grow the annual spend. I think I've done a video on the numbers here, but that comes out about sort of low teens compound growth rate just from the e-commerce business. So if they were to start falling short on those numbers, I might take another look. And then I sort of had the cloud business in there as like a little bit of a kicker, which, you know, they just reported like a bad quarter and grew 35% year over year or something in the cloud business. So
I think 34. Yeah, crazy.
Yeah, there you go.
Speaking of the report, did you get what did you get out of the report, the most recent data? Because the stock price fell 10% or something on the news or something. I think is that right? Did I misread that?
Yeah, long-term investor over there. Did the stock go down? Didn't really notice.
Well, I actually didn't. I'm trying not to check the stock prices, but my friend told me Alibaba fell over, and I was just like, oh well.
It is down a lot. Yeah,
there was one day -11, and then the second day with -1 or -2, and when that was the ADR, so the American listed, and the one listed on the Hong Kong had actually a day before the announcement was made and the information were publicly provided, fell already 5%, and then the day after the information were available, it tanked another, I think, 8 or 9%. So obviously, not two different things, because obviously the markets are open to different times. That's obviously one of the reasons. Yeah. So but certainly down a lot.
Yeah. When you read the report, Michael, Tom, or whoever else read it, of course, what was your instinct coming out of it?
Yeah, and in all honesty, I'm still working through the full webcast, but I've seen kind of the highlights. So yeah, I think growth was a little slower overall, and even in the e-commerce business. And I'm starting to wonder if maybe this whole, I forget the phrase, but the whole thing where they were basically forcing people to pick one e-commerce site as opposed to being on several. I wonder if we're starting to maybe see some of the impact of that. But it's really hard to judge off a quarter. Earnings were down reasonably significantly, but it seemed to be just related to the value of their investment portfolio. Like operating earnings still grew. So yeah, hard to judge off a quarter, but probably a few things to keep an eye on.
Yeah,
John or Taylor, if you guys looked at Alibaba?
Yeah, I do own I do own a little bit of Alibaba, and I think for me, the things that I'm gonna keep an eye on is just comparing between the actuals and the estimates, for the next few quarters, and then just keep an eye on it. And if they keep on missing it by big time, and then obviously that's gonna impact a lot in the cash flow and the valuations. And but in terms of Alibaba, I look at the technical analysis a little bit as well. I look at the support and resistance in terms of, not just from the value.
Yeah.
But
so John, are you because you do a little bit of like trading as well as investing, right? So are you trading Alibaba or holding Alibaba long term, or a bit of both?
That I only hold long term, but okay. I always look at the technical analysis, the support and resistance, because I used to day trade. Look at the trend, the Fibonacci, and all this stuff, because it's just understanding the supply and demand and the psychology of the traders. Because sometimes the traders also have got, they move the market. They could move the market as well. With all these hedge funds, I'm pretty sure they have got a lot of bots and, algorithmic, high trading frequency also involving all this Alibaba as well. So, if Alibaba drops below $100, I think $100 is like that sort of a good support, a good psychological level. I'll really keep an eye on it. If it really drops below $100, I'll be really thinking about it. But again, I'm a buy and hold. So if it drops below 100, then I'll probably just keep on buying. Again, depending on the valuation. So I look at the technical analysis a little bit as well.
So you're mainly paying attention to that just out of interest with Alibaba more than anything. That's not actually driving any buying or selling unless it hits some lower price that's kind of interesting to you. Is that sort of how you view it?
Yeah, like that's right. So I look at the valuation. So I do my own valuation. Look at how much discounts we get in terms of the fundamentals, but also look at the technical as well. Obviously, Alibaba is just trending lower and lower and lower. And then if it keeps on hitting, 52-week low, keep on hitting 52-week low, that's not a good sign in terms of technical analysis. That's just from me. Like short term.
I have a question, John. You said before about like you keeping an eye on the actuals and estimates. Why would that matter? What the analysts think?
Because I base my valuation on their estimates. I look at the Seeking Alpha earnings estimate for the next 5 years, 7 years. They got a revenue estimate every quarter, and then if it keeps on missing that, it means that there is some, I don't know, for me, there's something that we don't know about. Like if the analysts keep on missing it, there is something going on. That you keep on missing every quarter.
But analysts are just people making educated guesses about the future. Like they're not going to be. I just feel like in 10 years' time, if the company's going to be bigger, it's going to be bigger. Like who cares what the analysts think about next quarter or anything? Like analysts confuse me a lot because I just think they're like essentially like. Taylor, you're about to go into this world if you get a job in the commerce space like you're thinking of doing, but you'll realize pretty quickly that analysts are, I don't know, they're just like guys in their 20s who just speculate on something.
I mean, the best ones are right like 60% of the time, and like in investing, maybe that's a good hit rate, but in general, like anything, it's pretty low.
Yeah, I have low respect for analysts. That's all I think is what I'm trying to go.
There's the good old dartboard and monkey analogies out there.
I'm interested in how you're, like you said, you're using Seeking Alpha, for example, but like who are those guys? Who are these people making these decisions on Seeking Alpha? They may be morons. Like I don't know. Like have you had? Is there data in the past that shows you that the Seeking Alpha guys are better than the others, or is that why you chose them, or is there? Give me some more color there.
Yeah, I mean, like I think with Alibaba, they got like 20, 25 analysts. Surely there's some sort of merit to it if they are putting it out there, because like if they misestimate, it's all over the news. It's affecting the psychology of the market. Again, like. I mean, like I think I had to rely on their estimates. I mean, like I can sort of predict. Like I don't know the business strong enough unless I'm in the management team to know, what is going to be the next quarter going to be. But there has some. I mean, like for me, I had to rely to it or put a discount to it. Whatever the estimate. Put a 20% discount or whatever to be conservative. But again, yeah, you made a very good point. They probably miss 40% of the time.
Yeah, like one of the things that's always stuck with me is I think it was a Monish Prabrai story of he was looking at some stock in India when he was kind of just getting first into value investing, and he was doing a fairly classic Prabrai approach of like I want to say it was a real estate company. I might have that wrong, but he was essentially looking at the liquidation value of the assets that the business owned, and yeah, I'm going to be wrong on the numbers here, but it was something like a 5-to-1 kind of delta between the stock price and, they had kind of 5 times that in like net asset value or liquidation value. And there were a couple analysts like covering the stock, but they're putting out price targets. They think the stock's going to go up 20% or down 20%. And Monish is over here calling them saying, I think it's worth 5 times as much. Like, but they can't really be bold. I think there's a bit of like career risk maybe involved in there, and they really can't publish those big targets unless you're ARK. Then you can do whatever you want.
I always look at the price target. It's so funny because if the stock goes,
it's Suchim Computers apparently. That's that story, which I've probably just butchered. But
Oh, there you go. Yeah, it's just funny, especially with like analysts and price targets and stuff. It's like it's so predictable. Like if the stock goes up, the price targets go up. If the stock goes down, the price targets go down. It's just, and I think you're right. There's just they all want to be roughly around everybody else. No one wants to be the person that just says, no, look, I've done my DD and I know, well, we never know anything, but I'm pretty certain that the valuation says X and it's like way out.
I enjoy going on YouTube
within reaching distance of each other.
I enjoy going on YouTube and watching Stephen Mark Ryan, Dave Lee, and Tesla podcast on their numbers because they're beating professional analysts at their own game, all on Tesla, of course, and the analysts are missing over and over and over and over, but some random strangers that just do it in their spare time are beating them.
But I like it because like analysts will just come out and say, or investment firms or whatever, just say, oh, we're raising this price target. And it's like, okay, cool. And a lot of these guys that like the ones that you mentioned there, Taylor, that are well into Tesla, they'll make a 1 hour video with a massive spreadsheet of their predictions. And sure, they're predictions, so you don't just like, yeah, I trust you, because they're like
50% a year CAGR.
They're transparent and they're bold.
But they'll go through line by line and they'll say, look, this is my reasoning behind this growth rate. This is my reasoning behind that. And then they kind of work through it and you're like, actually, no, I can see that you have done the work here and that is actually pretty correct.
Some of the analysts recently were just like, oh, we value Tesla in China at 400 million, or 400 billion, sorry. And they acted like the whole China thing didn't exist like 6 months ago, a year ago. They just bumped it up now and went, China's worth this much now. And it's like, it was going to be worth that much in the past. It just hadn't got there yet.
Yeah.
It was very weird.
Yeah. We better get to this next super chat, guys. It's been sitting there for a while. We've got super chat from After Dinner Investor. Shout out to Jason. Great conversation, guys. Andrew, does Tencent have direct competitors like JD is to Alibaba? I like businesses without competitors.
WeChat is, if we're talking about WeChat specifically, because that's really that's the big asset that Tencent have. No, they don't have in China. They don't, but in the world, yes, of course, there is obviously Instagram, Facebook, Salesforce. I don't know, pretty much every other app-based platform you can think of would be a competitor in the world. But in China, they have very. I don't know what the market share is. I'd have to look into that, but I would be very surprised if it wasn't Google-like numbers.
I left a link. Chuck, you can chuck that link up on the screen if you wanted, Tom. What I'm thinking, what website, what social media apps that we have are just not allowed in China? I'm sure probably most of them aren't. I don't know if obviously one of the reasons that WeChat has a fantastic moat is just because Facebook is just not allowed. So it's just like, oh, this is beautiful, But I wonder what other websites are not allowed. But like, I just sent that link. Where's WeChat? It's like in the middle there. But it's pretty. Like Facebook's obviously not in China, so that's Facebook, WhatsApp, Instagram, and Messenger. Do they have YouTube? Do they watch YouTube in China?
I don't think so.
No, they don't, because it's Google, so they can't access YouTube.
Okay, so YouTube's out of the equation, which leaves WeChat as the biggest. So and by a long way. So
I think Douyin, which is just under TikTok there, I'm pretty sure, in QQ, that's all Tencent too. I think I'll have to double check.
Yeah, QQ isn't it? Yeah,
I will double check, but I'm pretty sure Douyin is the gaming streaming people in China. Do they have competitors? Yeah, of course they do, but I think we have to look at the Western markets, but then they get this big China firewall kind of protection.
Yeah, Great Firewall of China and all that.
Interesting.
Did that answer the question? I don't know if it did or not, but
Yeah. Do you have any concern about Tencent being largely like a one-trick pony with WeChat, or is it just so ingrained that it could never be disrupted?
There's obviously things can disrupt anything. I guess it's possible. I don't know what's happening in the future. Tencent's got a pretty epic investment portfolio, which gives you a fair bit of safety too. Like half of what is it? It must be $200 to $300 billion worth just in their investment portfolio. Have a market cap of whatever they're at $650 billion at the moment. So that's over a third of their market cap is tied up in other businesses, essentially, in their small stakes that they have. So it gives you a fair bit of. I feel like you're really diversified with Tencent. I think that's an underutilized point. So I don't think it's a one-trick pony at all. I think if WeChat started to see issues for whatever reason, which I can't see that happening, but Tencent
the second half of this comment that's was separate. Tencent basically owns 10 to 40% of anything that isn't Baba. Was that full comment in China?
It's pretty good.
Right.
That's pretty really spot on. Like that investment portfolio. I don't know if you guys have ever looked at it. There's a not boring is a blogger who put out a breakdown of all their investment portfolio assets and just the top 100 anyway. And there's some incredible
Just
names.
100.
It's some incredible names in there. And I think they've got somewhere between 500 and 700 companies that they've invested in. So just the top 100 is epic. Like you just have a read of it and you'll be like, oh yeah, I'd jump on board that investment portfolio all day.
Yeah, that's crazy. We got any other questions in the chat you guys are seeing there that you want to have a crack at? There's a fair bit of Baba and Tencent going on here. I feel like we've beaten that horse a little, but if you want to keep going on it, we can.
Just quickly, can you guys hear the banging from my upstairs? Can you hear that? No. Okay, cool. I was just wondering if I needed to mute while I wasn't talking.
All good.
All good. Sweet.
Here's another. This is still kind of a Baba question, but this might get us to a slightly different topic. I'm thinking of owning Baba through DJ Co and Tencent through Process. So maybe just I can speak to the Alibaba and Daily Journal Corporation part of this a little bit because I have done some work on this. So current market cap for Daily Journal, which for anyone that doesn't know is where we see Charlie Munger's 13F essentially. Baba represents about 10% of the market cap roughly. So it'd be pretty modest Alibaba exposure if you were to just buy Daily Journal. But Daily Journal is a quite interesting business that, has a lot of value that's really impossible, frankly, to see on the financial statements. So there's sort of three parts to the business. There's a stock portfolio, which is worth like $300 or $400 million, I think, and the market cap's like 500 million. So it's mostly that investment portfolio of a couple of stocks that Charlie Munger and his partner at the time, Rick Guerin, bought during the financial crisis, like almost bottom ticked a few US bank stocks, which was very impressive. They also have like a dying newspaper business, which makes like $1 million a year, something like that. And then they have this basically like courthouse software business, which they have these long-term contracts, like 10-year contracts with a lot of courthouses in the US and actually quite a few customers in Australia as well. And there's some really interesting stuff going on there. Like, these are 10-year plus contracts in many cases. And in a lot of cases, there's no revenue showing up for like the first 5 years. Like it can be a really long time till any revenue turns up, which is a very unusual software model. Like they're not charging anything to get these courthouse software systems customized to that particular court system in different countries or anything like that. So there's people out there kind of valuing this like maybe as much as 4 or 5 times what the current sort of market cap is. That's where they think this could go in 10 years. And it's just a business that really nobody knows about, because they don't even talk about the software business at the Daily Journal meetings. People just turn up to ask Charlie about life and investing, and the actual company never gets mentioned. It's like a running joke that you walk into the Daily Journal Corporation annual meeting and you fill out the little thing that says, how many shares do you own? And everyone's writing down 0 because no one cares about the business. I don't know if anyone else has looked into that one.
I have a question for you, Tom. The software business that you just talked about, have you worked out whether there's like a competitive advantage they have? Like, is it actually a good idea what they're doing?
Yeah, Matthew Peterson's done a lot of work on this. I just recorded a podcast with him recently, and that'll be up in the next couple of days, so you'll get a more in-depth answer then. But it's the kind of industry where, like the Microsofts of the world, largely I don't think are interested. It's just the addressable market's just too small to move the needle for them. There is a competitor called Tyler Technologies, which I think is a public company as well, and they trade at one of these 2021 like software multiples of 15 times sales or something, I think. So they're a competitor, but I think Daily Journal really has an advantage in just the way that they build their customers. I think is huge for them. Like they're working with government organizations, and these people are having to put forward, we want to use this new software system, so we're going to need this level of funding and all this stuff. And oh, by the way, we've got Tyler Technologies and Daily Journal don't want to charge us anything for 6 years. So let's maybe go with that one. I think is quite the competitive advantage.
Interesting. It's a cool one.
Yeah, it's an interesting one to look at. It'll be one to follow over the next few years. Any other questions jumping out at you guys that you want to have a crack at?
When are you doing daily podcasts?
When am I doing daily podcasts? Yeah, that's not going to happen.
Jeez, that'd be, what an effort that'd be.
Yeah, you guys are very consistent with your weekly podcast, Brandon, I must say.
Yeah, well, that's because it's just honestly just because we don't care. We're just going to send it. Like a lot of the podcasts I listen to, they have like beautiful like fade in music and scripted. And it's like, did you know the blah 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 blah? And that's just not us. And they have like sponsor bits in the middle, professionally produced. And we're just like, wake up Thursday morning, gather the most important stock market related news topics of the week, put them in a Google Doc, and then just talk about them for an hour. It's like, that's pretty much it. They're just like,
that's good.
We start it, we talk about it, we stop it, we send it to the editor, and then that's just
nice.
It. So we're very I don't know. We just
efficient.
Yeah. Well, we could like spend 3 days on a podcast and fine tuning it, but we just know that we wouldn't put the show out there every week if we did that. So just like force ourselves. But,
yeah,
screw editing. Yeah, I agree, Dave.
I'm not a big fan of editing. Just like it raw.
I was mentioning to Andrew before we went live here about, since I've started doing the video versions of the podcast, those are the computer wants to explode with like an hour and a half video. Trying to put that together, so might have to outsource the editing for that one at some point here soon.
Yeah. That's what I'm focusing on that at the moment, because I realized that, I don't know about you guys, but it's like for me, I just want to spend my time, like I spend so much of my time editing, and I'm like, I shouldn't be doing that. It's like, I like the stock market. I want to be reading reports and making videos and stuff. And then it's just like, I looked at like my schedule, and it's like, I spend this much time actually making the video, and then I spend this much time, doing the editing for the video. I'm like, man, that's just backwards. So I don't know. Do you guys spend like a lot of time? What do you guys find with the editing? How do you guys kind of do it?
So I'm a dad of 2 boys, yeah, and I have a full-time job. So, and obviously the people that have visited my channel obviously saw that I had a 9-month break of YouTube, which I didn't really announce, but we got a second son, so I really took the time to focus on family, which was amazing, and I'm slowly getting back into it, which I'm really looking forward to. But the way I do it is that I'm basically using the same technology that we are using for this live stream and recording the video this way, because this way you can share your screen easily, and I try to have a conversational style video. So I just do not have the time to edit
Right.
videos, and that's why I want to focus on content, and I want to focus on having conversations, and that way the video will never be professional. But this is not what I want to get out of it. I want to have good conversations. I want to talk about topics that interests me. I want to try to make sure making a video sparks me a little bit more in trying to digging out a little bit more details about stuff. And yeah, so this is my approach.
Yeah.
Yeah, I think for me, I can feel you, Brendan. Like I've been, because I just started last year, so I've been trying, spending a lot of time with the edits and the After Effects and all this, and then don't get views, like spending 12 hours on it, and then so like I'm just trying and trial and error. I think I just don't have time as much to edit, and then just I don't know, just put the video out and that's it, and then who cares what's going to happen. So I think I'm sort of going down on my quality of editing, but again, I don't have a lot of subscribers, so it doesn't really, I don't know, I just feel like it doesn't really impact me as much with better editing.
Right. Yeah.
Well, one of the things that and one of the reasons why I'm doing it is making sure that developing as much information and looking up as much information as possible about a specific topic, so that it challenges you as well to make sure you actually know what you're talking about, and providing something presentable so that people who watch the videos actually get value from the content, and probably not necessarily from the high quality cutting, and there might be situations where I'm stumbling across a specific sentence a little bit, but still I hope that the value overall will be good for people. No?
Can I challenge you guys on this?
100%.
I think you're all insane for not paying an editor to do your editing, because you need to, like, if you think about how much time, like Brendan, I don't know how many hours you're spending on editing a week, but like if
Quite
you're
a few.
valuing, like, even if it's like, I don't know, 5 hours maybe.
Yeah, it'd probably be like, yeah, it'd probably be maybe 10, I reckon.
Go on to Upwork and find someone for a really good price just to help you out, because you'll get so much time back. It'll free up your brain to think about something else, your brain to think about maybe more content or a better idea or something like that. It's not about the money. It's more about the time and mental
Getting
capacity.
your time back, yeah.
It's the mental capacity that you'll gain from it, and you'll think clearer because you're not doing something that's repetitive or something done every week. Look, I honestly, I think I started getting an editor after like my 3rd video, and I'm not running my YouTube channel at any profit at all. Like, it's definitely at a loss, but it's a small loss, and that's okay, because I'm freeing up so much more mental energy for actually either the content itself or my actual research or the stuff that I really want to do. And then once I literally just I record, I upload it to Dropbox, send the link off to the guy who helps me, who does the editing, and then it comes back.
Right. Yep.
And after like 3 or 4 weeks of working with someone, they'll understand your style,
They'll get it.
what you like, and you just get your life back, man. You really need to try that.
Yeah.
I think I'm going to go under that path once I get a full-time job, because I've been at uni, so I haven't had the spare cash that's not invested to hire an editor, or haven't really got a consistent upload schedule or anything. But I think I will just get an editor casual to just do the background stuff.
as Hamish and Andy would say, I feel like maybe I've lost touch with the common man a little bit there by saying that. But if you've got jobs, please like try it. You need to get your time back.
You guys good to take a couple more questions before we wrap it up?
Yeah, sure.
There's an interesting one from Charlie. I'd be keen to hear what people have to say about this one. Any of you essentially specialize in certain industries, or this largely a circle of competence question, I suppose? Like we've been talking about Alibaba and Tencent and all sorts of things, which are probably pushing the edge of some circles here. But do you guys have anything that's kind of right up your alley that you think the average investor maybe doesn't understand quite as well?
My specialization would be the electric vehicle industry, or at least automotive industry, getting more understanding in that, because 42% of my portfolio is Tesla.
That's a pretty
And
awesome
is that
circle of competence. Wow, that's so far off my radar. So that's impressive if you know that well.
Have you looked at any of the other EV companies? Like I know there's the ones that are all over like social media, and which is a weird place to see stocks, but that's a different discussion. Like there's like Rivian and Neo and all these kind of ones that everyone kind of knows.
Lucid.
But there's kind of a few of them. But have you looked at like the the BYDs of the world, like in China? I know Buffett and Li Lu, who manages a bit of money for Charlie Munger, has a big investment in BYD. Have you looked kind of offshore
I
at
haven't
any
looked
of
into
those types of
Xpeng
businesses?
or anything really, because the guys I've been watching on YouTube have been making great points on the design of the cars, the size, the price, kind of the consumers they're targeting, and they may be able to hit the bigger markets, but I think they're kind of just doing what China does with most of the industries and staying at home. Could be wrong, but that's how it's looking. And
Yeah, cool.
Tesla is, I guess, more transparent with all the information, so it's a lot easier to understand. And I'm enjoying what I'm doing now, so I don't plan to look into them. I'm just kind of keeping them on the radar as competitors and market share stealers, essentially.
Nice. What else you guys got? Any areas of specialty?
So for me, for example, I mentioned earlier that I work in IT, and I probably have two examples of investments that I certainly made because I have knowledge in that area, and that is Cloudflare and Afterpay. Obviously, both high growth stocks that certainly never had the big part in my portfolio. So they never had a big position in my portfolio. However, because I actually utilized their services very early on, and I even knew Atlassian before they actually went to become a public company. So they're actually based in Sydney, and they have two main products, which is Jira and Confluence, which I have used. And that was, again, before they went public. And before they went public, they were actually a profitable company. So a small startup with an amazing product that just with insane growth. And Atlassian got listed on the NASDAQ in 2018, I believe. I'm not 100% sure. They started at a price from around 20. They are now at $400, and I definitely did not have them in my portfolio for that long. I do not have a 20 bagger in my portfolio, but I understand it. So I had knowledge about the product. I was using it, and I knew that this is a company that just provides something that is needed in the market. So one of their products is a system that is primarily used from programmers to track progress in their their programming projects, and they can basically work together with other people. They can leave comments, and you can also create workflows for certain type of projects in there. So yeah, so that was certainly a company that I knew very well, and I knew this is going to be good. And I took a stake in the company. I made the mistake to sell way too early, but I guess that's still okay. I made a good deal with them, and yeah. So that will be one thing. And with Cloudflare, it's a company that again, IT industry, and it's about creating internet connections that are faster than what you have at the moment. So what they build is data centers that connect websites with a much higher speed. And again, a product that I have used through my work, and something that I see has definitely demand for the future. The tag there, or the name there, is edged networking, and which basically speeds up the way you connect with other parts of the world. So yeah, again, work related, because I work in IT for 15 years now, and have seen a lot of different products, and you get a feel for what products actually will be utilized a lot, and actually provide a big benefit for the user, and just have this little bit extra that the user actually benefits from.
Mm-hmm.
Yeah, for me, I've worked in retail in the last 8 years. So I work for a duty-free company, so I understand retail inside out. But it's not the stocks that I want to buy into retail, unless it's e-commerce. There's just too many problems with stock. It's just stock write-offs just gonna kill your profit. But I work as an accountant for a number of years now, so I understand the product like Zero, Intuit, like QuickBooks Online, and I can see a lot of value to it. Like I used to, when I do bookkeeping, I used to use MYOB. It's just like a desktop MYOB, and I used to spend like, I don't know, 4 or 5 hours just doing bookkeeping, download the statement and then coding every single transaction. And then Zero came along, and I could finish the work within an hour, because you can just do a repeat transaction. So I understand like Zero into it, but Zero is too expensive in my opinion. I sold way too early, but this just from an accountant's point of view, it's a good product, Zero and QuickBooks.
Andrew, Brandon, what do you guys got for us?
I don't know. I get a little bit. I feel like I've got imposter syndrome when I get asked, like, "Oh, what do you specialize in?" Because I'm like, "Oh, I don't really. I'm just a guy on the internet." Yeah, I don't know, but I think that's probably a good thing, is to not convince yourself that I specialize in something a little bit, or not just like, "Oh man, I know everything there is to know about this." But I think generally speaking, my interests that I have would be, because I guess the stuff I look into is just stuff that I'm interested in. That's kind of just the way that I go about it. It would be social media, entertainment, like the Disneys or the Netflixes, electric vehicles a bit. I'm probably not actually the smartest guy going around when it comes to electric vehicles, but that's probably where I'm at. And I'm just trying to obviously wrap my head around Chinese tech a little bit more. So this discussion has been helpful. Yeah, that's probably what I'd say. But I definitely do not feel as though, I'm anywhere close to having expertise in any sort of particular area. I don't know. What do you feel like, Tom, Andrew?
Tom, you can go first, mate, if you want.
All right. Yeah, I got a few. Like I have a background in, I grew up on a farm, studied agricultural science, so I feel like I understand this. Yeah, it can vary country to country a little bit with ag sometimes, but at least in the New Zealand context, I feel like I understand a lot of those businesses pretty well. Milk producers, meat processors, fertilizer companies, that sort of thing. I think I said this the first time I was on your podcast, Brandon, it's kind of like an unfortunate circle of competence to have in agriculture because to a large extent, that many of them are just commodity businesses, and it's hard to have competitive advantages in a lot of cases there. But occasionally a business comes along that's a low-cost producer, like a CF Industries, often shows up in Phil Town's portfolio as a low-cost producer of nitrogen fertilizer. Maybe you see a company that comes along that tries to sell at a like super premium price point, like an A2 milk, that sort of thing. So I feel like I understand those businesses pretty well. And then I guess a little like John, just, you know, you kind of come across other things randomly just in your day job. Like, you know, I can also see, I'm not an accountant or anything like that, but I can see the advantages in the small company that I work in for products like Zero. For the last couple of years, we've transitioned across to Microsoft Azure. So we've been able to see some of the power of cloud services and that sort of thing, and how big a switching cost there probably are to move to like an AWS or some other competitor. So those are sort of my few areas that I think I've got at least a little bit of an edge in. What do you got, Andrew?
This is very varied. Everyone's different. It's pretty cool. I don't know. I don't feel like I'm that special at anything either, but maybe e-commerce, just because I had a business selling stuff online. So that whole like online working world where you're hiring off Upwork, and I understand logistics kind of pretty well, I guess. So understanding like, you know, how stuff moves around the world. Yep, that's probably enough.
Yeah, nice. Let's do maybe one more just to wrap it up. But I'm scrolling back through a few questions here, but this might be a quick one for us to have a crack at. What's the best book you guys have read recently? I feel like we might have covered this on the last stream. Maybe I've got that wrong, but any book suggestions, investing or otherwise?
Yeah, I've got a really good one. It's called Influence. It might be a bit of a classic. I don't know if anyone's read it, but Influence is all about like how we are all manipulated by like all these different things in our lives. How you know, for example, I just read the little chapter on like the impact, the manipulation of the crowd. So like, let's say you're walking down the street and there's a crowd of people gathered around something. You automatically, it's like subconsciously, go and see what's going on. Like you kind of want to know what everyone else is seeing, even if it's nothing. So like there could be a group of people hired to look at nothing, yet it'll just build this massive big crowd around nothing. And you kind of feel like an idiot when stuff like that happens, but it's subconscious in our brain. They do all these experiments, and the Influence book is pretty much scientific experiments, how easily manipulated we all are. And most of it's subconscious. We don't even think about it. We're like, oh yeah, that seems obvious. Why would I ever do that? But you do it. You would catch yourself doing it all the time.
Yeah, that's a big part of why I love doing economics. They talk about lots of those things. Bystander effect is a good one.
I've seen a video of like two people that just stand out the front of a tall building or something, and then they just go like that. They're looking at nothing, but after a while, everyone's just like,
yeah. So the theory on that one is if one person does it, most people will just walk past and not look. But if more than 2 or 3 people are all stopped and looking, then like 1,000 people will join.
That's crazy.
Yeah. This sounds a lot like people investing in stocks sometimes.
It's not a investing specific book or anything. It's a life kind of hacking book a little bit. It's really cool though. It's really interesting.
I've got
I got one.
Oh yeah,
you go, Brandon. Oh,
that's all good. You go.
I bought my girlfriend a book from one of her favorite comedians, Daniel Sloss. Everyone You Hate Is Going to Die. I haven't read it yet, but apparently it's good. It has a lot of swear words in it, but I assume it's got some good pieces in there if she likes it. So I'll be giving that a wee read.
Nice.
I would recommend this book. I don't know if you guys
David Goggins.
Oh
yeah.
Yeah.
It's just crazy.
Yeah. That's
sorry, Brendan.
No. I agree that I need to read that one. One that I had, which is a little bit out of left field, is a book called Never Split the Difference. Have you guys ever heard of this book?
I've heard it.
Heard of it. So it's by a guy called Chris Voss, who was the lead hostage negotiator for FBI. And I actually got onto this book because he's done a masterclass, and I was just watching his masterclass. But this is not really investing specific, but more about how to communicate with people effectively. And it honestly, it would help a lot if you're a business owner. But there's even things like if you want to be better at holding a conversation with people and stuff like that. So he talks about how even just the basics of like mirroring, where, you know, if you want to hold a conversation better, you just talk to someone, ask them a question, and then pick out 3 key words, and then just repeat those 3 words once they finish talking. So you might talk about, Tencent's had this amazing growth over the last little while. And you say, amazing growth. And then they continue to expand. And it's just like how you can just keep, people talking. And obviously he talks about it in his area, which was hostage negotiation, and how they would talk to, captors to end up getting the hostages back and that sort of stuff. But now he runs businesses, and there's a whole bunch of different tactics that when he explains them, I'm just like, wow, these are actually so effective at prompting better communication. And even if you're in some sort of negotiation standpoint, ways where you can actually I don't like to use the word manipulate, but it is almost manipulate somebody else's thought processes to actually make them say what you want and make them feel as though they came up with this great idea when it's actually the way that you've spoken has made them bring up this idea, and you've just essentially congratulated for saying the thing that you wanted them to say. So there's
not
a lot of
manipulation at all, Brendan. Not manipulation.
No.
I feel like Andrew's book suggestion is like the antidote to Brandon's book. Understanding how you're being influenced.
It was interesting though, very interesting, from somebody that really knows like the ins and outs of human communication. It's like, wow, that's crazy. But very, very effective strategies and stuff, particularly for people in business, but also just to be better at talking to people, really.
Cool.
Sorry, I probably went on a rant there for like 5 minutes.
All good. You got anything for us, Michael?
No, I think I shared mine last week. No, and I don't know, another book that I read that was I don't know, that was a little bit about future products and what the future might hold in investment, and I don't want to say it was similar to what ARK is proposing with their annual presentation. But it's a book called 10x DNA from Frank Thelen. It's a German investor into also into venture capital, and while I think big parts of that are all over the place and just bragging about what he has achieved, I still think it had a lot of value about how specific technologies work and what parts of a technology actually potentially will make a difference in the future. For example, with blockchain, obviously everyone is talking about cryptocurrency, but one of the things that after that book I started thinking about what potential other things could be there, and I'm waiting for the time when there will be a company that develops a contract management system based on the blockchain, which basically replaces the part where you can then do bigger transactions with, for example, buying a house, and the contract will be written obviously on the blockchain, so no one can change or do it without that someone would notice it. And so these bits, these technologies that might be utilized in a different way than that they are known for at the moment was really interesting. And so that's why I have not much knowledge about cryptocurrencies at all. I'm not invested into cryptocurrencies, while obviously this obviously worked very well, and I think there will be a future for currencies that are others than the US dollar or other currencies. And I think it's a big topic. However, I think the technology just holds so much more.
Nice.
Yeah, cool.
Yeah,
Sorry, I'm just jotting down a few here. So I recently reread The Education of a Value Investor by Guy Spear, which is very good if no one's ever read that. I think if we didn't mention it live, it might have been just before we went live, talking about this whole concept of the compounding of goodwill, and Guy Spear getting in this habit of writing, I think it's like 5 or 10 notes, just short thank you notes and that sort of thing to people each day, which I quite like, but it does have obviously investing content in there as well. Other stuff, I recently read Good to Great by Jim Collins, which is a fairly well-known like business management book, but that was pretty good. And not really investing related, but I'm reading a Richard Dawkins book at the moment, The Magic of Reality, which I feel a bit weird reading it, having a science degree, but it's gives you kind of basic area, like a basic understanding of various different areas of science. Like I have a lot of kind of specialty in agricultural science and biology and that sort of thing. But if you want to understand the basics of, the solar system and why we have seasons and why is there day and night and how are rainbows created, why are they a thing, all that sort of basic understand the universe stuff. That's quite a cool one. Yeah, exactly.
How much time do we have, Tom? We can maybe, if we have a minute, we can do another question maybe.
Yeah, sure. Let's do one more.
The question I wanted to quickly just ask, Karan asks, does anyone trade options to generate cash flow while waiting for good investments? Does anyone else do this?
Yeah, sorry, Andrew, just before we get to that, I think I skipped over a super chat from After Dinner Investor, $1.99. Thank you, After Dinner Investor. Righto, let's get to, if you got a question there, Jason, as well, feel free to pop that in there. I think we might have answered a few already, but we'll utilize that. Feel free to leverage that super chat and ask a question. So
I just use the chance before we go into the question and say thank you. I have to drop off, unfortunately. Thanks for having me, and thanks everyone for contributing. Yeah,
good chatting to you,
Michael. Yeah, thanks, Michael. Yeah, that mo was impressive.
I'll catch up in March.
Yeah, see you guys.
All right, see ya.
See you, Michael.
How far back was that options question? Anyhow,
no.
Yeah, but essentially it was about selling options to generate cash flow, right?
Yeah.
Does
anyone do this?
I don't do it, but it's so smart. I didn't even think, because I've never bought options ever. But I remember, I think I watched a Phil Town video, or maybe listened to a podcast, or maybe I even watched one of your videos, Tom, where you talked about it and explained it after one of his 13Fs. And I was like, yeah, I mean, makes sense. If things are expensive, you want to buy a certain company at a lower price, then, just sell some options and generate some cash. And then if the conditions are met, then you've bought the company you want at a good price. But if not, then you just keep your little dollar on the side. So I think it's smart, but I don't know. Have you guys ever implemented it?
I've been thinking about getting into it now that I have a lot more free mental space after finishing uni, but I'll have to spend some time looking at the, platforms that are available. I'm a complete newbie at it.
Yeah, I'm like you, yeah.
John, do you coming from a trading background, you would have probably jumped into options. The reason I'm highlighted this question, I sell put options, but that's all I do. I don't know really anything about the call side of it. You probably do know though.
Yeah, no, sorry, Andrew. Options is one of the things I want to learn, but I just know a little bit, but I don't trade options. I tried to open up my options account in Interactive Brokers. We can do it in Australia, but I got rejected all the time. So I'm like, I would like to experiment, in my self-managed super fund. But yeah, no, sorry,
Okay.
I can comment on that.
I've sold process puts recently.
Right.
Yeah.
Cool.
Yeah, I like the strategy of selling put options. There's actually something again I did discuss with Matt Peterson. So if anyone wants a full discussion on someone who uses it extensively in kind of a value investing context, that'll be coming out soon. But yeah, I think it's interesting. Like if you sell a put option, essentially, you're acting like an insurance company almost, and you're saying, I will buy this stock from you, at a certain strike price up until a certain date. And you get paid a premium to do that. And if the stock goes down, you get to buy a company that you would have liked to own anyway. So that's pretty nice. And if the stock doesn't go down and you don't get put the shares, you generate some income. And depending on what the options premium kind of looks like, you can generate reasonably significant rates of return. I guess the risk is if the stock rockets and you never buy it, you kind of don't capture that upside as a risk of selling put options. And there's other things to consider, but I don't mind the strategy. I guess one thing to keep in mind, particularly if you're a newer investor, is you do need, depending on the stock especially, you do need a reasonable amount of capital to be selling put options. So options contracts are denominated in 100 share amounts. So,
Damn.
I just pulled up an example. Like if you sold puts on, say, Berkshire Hathaway B shares, which are like $280 a share or something, and you collect some premium on that, and then the stock drops to that strike price, and you're forced to buy those shares. 100 times 280 is like $28,000 you'd have to buy in Berkshire B shares in that example. If it's Amazon stock, we're talking like $300,000 probably here. So
I don't actually think they have Amazon options. I don't think that exists.
Well, there you go. Yeah. So that's something just to keep in mind. Like you can very quickly overextend yourself if you're not careful. You got to pay attention to that.
You do. So you get burnt on the Baba side of it. Like Alibaba for me, that's how I picked up all my shares in Alibaba. Was I had strikes at like 220, 200, 180, 160, and I got them all assigned to me, which was great. Like I was going to buy them at those prices anyway, but obviously short-term brain that comes in and goes, well, I could have bought all of them at 150.
Yeah. Mm. How low, if you're selling put options, how low can you get the strike price to actually have someone that wants to buy? Like I don't really. Obviously, I'm a noob. But...
It varies on the time. So if it's like a week away, let's say it's going to expire in a week, you're not going to get much of a gap between the current price and how low. Like you might get maximum 10%, maybe 15%. In a week, in like a short period of time. But if you push that out over 6 months, you're going to get a bigger spread, if that makes sense. Like more options essentially into part of the market. But so I think I've seen you can nearly get strikes under 100 for Alibaba at the moment, but you got to push that out for maybe 3 to 6 months at least.
Okay. Right.
But that's okay. Like, a lot of people will do that because it's fine. They want to buy it at $100 and that might happen over the next 6 months. So, but you won't collect much of a premium. So obviously the premium declines the further away from the current price you get. So my theory is that you just sort of work out what you want to pay for it. And once you've worked that out, just lock in that strike price. That's the price. That's fine.
Yeah, in this scenario, that's the most important thing is to know what you want to buy it at. Yeah.
Yeah, because you can fall into the trap of like going too far out, like going too low and having no chance in capturing a very small premium. But you really would have bought the stock at a certain price. You just got to try to take the stock volatility and the actual stock ticker out of the scenario as much as you can.
Yeah, and I think if you are going to go out and do some of those longer term options, you need to be getting a reasonable rate of return on that to essentially have cash tied up should you get put those shares. Like you don't want to probably be stuck in stuck with cash sitting around just in case you get put shares on a contract for like 2 years and then you never get put that stock and you're earning 3% on it. Probably not going to get that low, but you're earning, returns that don't meet your hurdle rate. And at the same time, you're finding other new ideas that are interesting that you'd prefer to use that cash on.
Yeah, I like that's perfect. That's a great point. So I think somewhere between like 2 weeks and 3 or 4 months is probably a good range. I think once you go further than that, you're locking up cash for quite a long period of time. You go shorter than that, you're not really getting much of a premium. So, yeah, that's sort of my takes. You kind of play around with the numbers a little bit, and like I got Process at, I think I was getting 3.5%, but it was like a 14-day option. So 3.5% over 14 days is pretty epic.
Yeah, for sure. And it also depends on so options are priced using the Black-Scholes formula. I think it's called Black-Scholes model. And one of the components of that is volatility. So you'll typically get larger, or beta as kind of volatility. So with more volatile stocks, you'll get larger option premiums generally. Whereas if you try and sell puts on like a Berkshire or something that's fairly stable, the numbers might just not make sense.
Yeah, that's good. So Alibaba, Process, these companies, because they're getting whipped around a little bit at the moment, their premiums are pretty attractive, more than they would be if they were just stable. So I think we use that to our advantage. Honestly, I think we use the market volatility and the irrationality of the market in your favor to get a high premium in these companies that you've done the work on and you want to invest in. So that's sort of my take on that. But I was just interested to hear if anyone had done anything else but selling puts. But it's okay.
Yeah, I was very interested in doing it around Tesla, around their volatility, but didn't have the capital, understanding, time, or anything.
Yeah, that'd be an expensive put option.
Yeah. I'm sitting with hundreds, not tens of thousands of my bank accounts.
Yeah, I mean, we've got a couple of comments on this, and I've never. All I'm saying here is stuff I've spoken to people about with options. I've actually never written a put contract or anything like that. Although I might try one just as an experiment with a stock I've got in mind. But are there ways that you can do this sort of stuff? Like we've got a comment here from Dave Invest about you can use option spreads if you've got less capital. Yeah, I just don't know enough about it to answer that well.
I don't know that one either. It'd be interesting to learn this stuff, but I only really taking the lead from Buffett. Well, Warren Buffett used to do this a lot. He used to sell puts all the time. He might still do it, I don't know, but and Phil Town obviously sells puts too. So they don't really dabble in anything else. They just sell puts. And I think that's enough of a
keep it simple.
Yeah, that's enough to keep my mind occupied.
I just got a shiver. I can see myself getting tangled up into some horrible mess.
Doing rollover call option strategies or something stupid like that.
Yeah, be careful. All good. All right, shall we wrap it up, guys? This was fun. I appreciate your time. We've been going for an hour and a half, and we covered a fair bit. So that was fun. Just a quick reminder, if anyone does want to contribute to the Movember campaign, it's a pinned comment in the chat, and it will also be in the description of this video if you're not watching live as well. And everyone who was on the stream, their channel links are down the description below as well if you're not subscribed to the full Margin of Shavety crew here. So yeah, thanks everyone for watching, and thanks guys for joining me. This was a good time.
Yeah. Cheers, Tom.
Thanks, guys.
All right.
Thanks, guys.
Cheers. See ya.